I would like to welcome Alejandro Werner, Director of the Western Hemisphere Department of the International Monetary Fund to the Americas Society, Council of the Americas. Thank you so much for joining us today. Alejandro, the IMF revised its 2015-2016 global growth forecast by 0.3%. What factors contributed to this adjustment?
Yeah, first, thanks for the invitation. And basically, although the significant drop in the price of oil represents an important positive factor to help world growth upwards, there were several other factors that were actually driving down growth. At the end of 2014, the European Union numbers were weaker than expected. Japan was weaker than expected. And also on China, the rebalancing has progressed a little bit faster than we had anticipated before, and investment has been coming down a little bit faster than we thought in our October projections. And transferring that into 2015, basically a lot of those factors, and on top of them, when you look at the emerging world, a significant revision of medium-term growth potential is also taking place. So when you sum all these factors that have outweighed the important positive effect coming from the decline in the price of oil, and also the important upward revision that we made for the US economy that is really showing signs of a much more vital recovery than what we expected some months ago.
Your growth projection for Latin America was revised to 1.3% from 2.2% in October. What countries will be most affected?
The country that was most affected was Venezuela. Venezuela, as a lot of people know, exports 33% of its GDP in oil. So the decline in the price of oil is a very negative shock to this economy that was already struggling with very high oil prices. So this shock really represents a very important negative effect for them. We're basically expecting the economy to contract by 7% in 2015. It's also the economy with the highest inflation in the world, around 65% for 2014, and we're expecting inflation to pick up to around 90% in 2015. And obviously we've all seen what is going on in terms of shortages, etc., in that economy. So this shock will imply a significant contraction in consumption, in GDP, in employment that will affect this economy the most. Then, in terms of our economic growth projections for next year, Argentina is another country that we're expecting to suffer a contraction. In terms of revisions, we actually revised Argentina up, but it's still expected to show a contraction. And in Brazil, we have revised significantly down. Basically, in 2014, Brazil did not grow, and we're expecting almost the same thing to happen in 2015. Basically, that economy is going through an important transition. It has to rebalance growth much more towards investment, exports, and less towards domestic consumption. They are in need of a significant fiscal and monetary adjustment, and the new economic team is actually implementing that. And in addition to that, a significant retrenching of public banks that have been lending aggressively in the last few years. The sub-regions of Latin America that might be doing better, and that's Central America and the Caribbean, with the US economy doing better and with the price of oil declining, these regions that have suffered in the last few years are expected to increase the rates of growth and to show important signs of these two positive shocks for them.
Lower oil prices are supposed to boost consumption, but they might also cause a deferral of investment by the public sector, by the private sector that doesn't see the returns that they once thought they would have. What effect will be stronger in Latin America in terms of the medium term?
I would say that in the short term, the impact is relatively balanced between the oil exporters and the oil importers, and between the effect on consumption and the effect on investment. In the medium term, there's an additional, I would say, negative effect in Latin America, that there are countries that today are not oil exporters or were marginal net exporters, such as Mexico, that in the medium term we're expecting to become significant net exporters, and they had important energy projects going on. Right. And basically, if we look at Mexico with its energy reform, Brazil with the pre-salt, the development of the pre-salt, and Argentina with Vaca Muerta. I mean, a lot of those initiatives will still move ahead, but they will move ahead, we think, at a slower pace than was expected, and therefore the effect on Latin America in the medium run might be slightly higher than what we are estimating in the short run.
And the governments who had planned significant infrastructure projects, do you expect those to continue, to be set aside?
No, I mean, obviously in those countries that are oil exporters, part of the revenues coming from oil were used to expand private and public expenditure, and in public expenditure some infrastructure projects, and obviously those will suffer. Hopefully, I mean, especially in those countries that have built buffers in the past and have relatively low debt to GDP ratios, they might be able to do a more gradual adjustment to accommodate their levels of expenditure towards the new reality, and in this sense the impact on infrastructure can be lower. And when we look back, I mean, part of the commodity boom in Latin America gave way to a very significant expansion of the public sector.
Yes.
And now that the cycle has turned, first with metals starting in 2011 and now with energy, especially oil, I mean, we will be seeing a moderation in the expansion of the government and maybe some reversals, and that might affect infrastructure in some countries. It is also true that in other countries in which the important decline in the oil bill will generate a positive effect, let's say Chile, Uruguay, Paraguay, Peru, that might actually generate more investment by the private sector, and that balances its way off in the region as a whole. But I would say that in the medium run, then the net effect of these very important expansions of investment in the energy sector. I mean, when you think, I mean, the energy reform in Mexico, maybe expectations of a 20, 30, 40 billion dollars of additional investment, yes. Part of that will be cut back. The same is true for Brazil, and the same might be true for Argentina with Vaca Muerta, that was supposed to generate a significant push on investment. So we need to wait a little bit more. We need to see exactly where the price of oil settles. But you're totally right that in the medium run we will see additional effects to the ones we're observing now.
Reduction of inequality continues to be an important challenge in Latin America, and the 1.3% growth rate for this year is a lot lower than the 5% number that many governments throughout the region have always said they need to grow in order to keep pulling people out of poverty. What policies would you recommend to governments in Latin America?
In the last decade, Latin America has been one of the few regions in the world that have actually improved income inequality. It has exhibited a significant reduction in poverty, but obviously it's easier to do this with high growth and abundance of resources than in periods of lower growth and a much tighter budget constraint. I think, I mean, the initiatives that the governments have done with respect to conditional cash transfers, with respect to improving health coverage, with respect to improving pensions for the lower segments of the populations, have had the desired effects. But I do think that going forward in this much tighter environment, what would be very important is to really work on the efficiency of these programs, the efficiency of public expenditures. For example, when you look at Latin America, it's not like in other countries in the world, but still the prevalence of energy subsidies is high. And as we all know, I mean, energy subsidies are completely regressive. I mean, a significant part of this expenditure ends up in the hands of the higher segments of the population. So for example, important redesigns in energy subsidies can actually generate savings within a smaller total expenditure to reshuffle to sustain the growth of some of the programs that are more progressive in terms of its income on the poorer segments of the population. I think a last point will be, as we have seen in Mexico, as we have seen in Chile, etc., the focus on education. With a medium-term perspective, I think both in terms of growth and in terms of income inequality, the distribution of education and human capital is very important, and I think Latin America I don't think, I mean, it is true when you look at the data. When you look at the quality of the education, Latin America ranks extremely poorly on all of these rankings, and that's an area where the region has to work.
What could happen to make you change your growth forecast for Latin America, revise it again? Is there anything that keeps you awake at night or that makes you smile?
Well, I think, I mean, obviously changes in the external conditions could be one. I mean, as we have seen, I mean, the sudden drop in the price of oil that maybe nobody was expecting 6 months ago really changed the way we see several economies. I would say that we are entering into, I mean, we're starting 2015, that will be the year in which everybody is expecting the Federal Reserve to start increasing its interest rates. Mm-hmm. Although, I mean, these actions are widely expected by the markets. I mean, they have the potential to generate volatility in local markets, as we saw when the former chairman of the Federal Reserve, Bernanke, started talking about tapering in May 2013. That generated a lot of volatility. We saw a lot of capital outflows taking place for a few months. And I think there is the potential to see some windows of volatility again. There has been a lot of flows to emerging markets. There has been significant growth, both of local sovereign debt markets in local currency, but also significant placement of corporate bonds in foreign currencies. Mm-hmm. And obviously those markets have not been fully tested in terms of their resilience. And I think we should be watchful of that. I think for Latin America, obviously the evolution of the Chinese economy is very important, and more than that, the composition of growth in China. So I would say those are two factors that would be important. And then internally, I think the key factor is the reaction function of economic policy to this new environment. I mean, in a sense, past crises have been the combination of two things: a negative external environment and then a bad policy reaction, in the sense that monetary and fiscal policy reacted the wrong way and amplified the problems, and that led to this crisis. So in a sense, it's much easier to see policy errors being made in tougher situations than in good environments. And in that sense, I think we should be really watchful, and we should be working with the countries in terms of advice, in terms of cross-country experiences, etc., for them to be really prudent in the period ahead, maintaining, I would say, the prudence that we have seen in the last 10 years.
Thank you very much, Alejandro. Great to have you with us.
No, thank you for having me.